Welcome, I'm Kathy Thornton with the Office of Personnel Management. In the following video, I'll go over basic workforce reshaping and restructuring concepts with an emphasis on using VERA and VSIP to help mitigate or avoid involuntary or adverse measures that can sometimes result when agencies are facing strained budgets or other major reorganizing and downsizing. For those of you in the human resources field, most of these terms are probably familiar to you. Let's briefly review what each means. Reorganizations happen commonly throughout the federal government and can usually be implemented with little or no adverse actions to the workforce. That is, with no loss of pay or position or other benefits. Often they involve shuffling of resources, movement of functions and people, and perhaps structural changes to an organization. Reduction in force is a term used in most of the federal government for permanently reducing the workforce. Reductions in force can involve downgrades, separations, demotions, and RIF involves formal, rather complex procedures regulated by CFR 351. Because of that, OPM provides a separate overview specifically of the reduction in force process. Furloughs, we've come to be familiar with that term in recent years, and a furlough is different from a RIF in that employees are temporarily placed in a non-pay status. The idea with a furlough is that the agency knows or plans on being able to bring the employee back onto the rolls in no more than a year. Otherwise, if the action is going to go beyond a year, most likely a reduction in force needs to be used. Furloughs are covered under separate guidance as well, rather lengthy guidance found at OPM's Pay and Leave website. Transfer of function is another term or concept that can be confusing. Transfer of function regulations actually fall under the RIF regulations found at CFR 351, but how they are carried out varies considerably from the mechanics of a RIF. For this reason, OPM also provides a separate video on transfer of function, as well as supplemental guidance on the OPM website. Management-directed reassignments are probably pretty familiar as well, especially to HR specialists. Sometimes we refer to them as MDRs, and they occur more often when individual positions are impacted by some type of need to reorganize work, and where the reassignment or the transfer of the work does not meet the definition of a transfer of function. Finally, commercial activities studies. That's a term that we have not heard of recently, although it still does exist. And that's a term to describe situations where the government competes essentially with contractors to retain work in-house. Commercial activity studies were fairly popular in the early 2000s, but there's been a moratorium on them since 2009. So as we said, workforce reshaping can sometimes result in involuntary measures or outcomes for employees. So we're going to spend a few minutes going over some options agencies can use at their discretion to help avoid or reduce some of these involuntary actions. For example, RIF, downgrade, and furlough. So to avoid these, we want to look at voluntary measures that may be offered in order to mitigate possible adverse outcomes. So we'll take some time and talk specifically about VERA and VSIP. Two voluntary measures, again, voluntary early retirement authority referred to as VERA, and voluntary separation incentive pay referred to as VSIP, are measures that agencies can take to avoid or lessen the impact of a RIF or other adverse measures. VERA is commonly referred to as an early out. It allows for temporary lowering of age and service requirements for retirement during periods of substantial downsizing or restructuring. To qualify for VERA, an employee must have at least 20 years of service and be at least age 50. Or if they have 25 years of service, they can retire early at any age. They'd need to be aware, however, that depending on the retirement system they retire early under, they may encounter a reduction in annuity. Specifically, with what we call the old retirement system, the Civil Service Retirement System, CSRS, there is a 2% per year permanent annuity reduction for each year under 55 that one retires under early retirement. For FERS, the Federal Employee Retirement System, referred to as kind of the new or current retirement system, there's no reduction when you take an early out. To be eligible for a VERA, of course, the employee must occupy a position that's covered by the approved agency plan. Might not be offered to the entire agency. The employee must have been on the agency's rolls for at least 31 days before the request. And of course, they cannot have received a notice of involuntary separation for misconduct or performance. They also have to be on a permanent appointment. That is to say, they cannot be serving on anything with any appointment that has a time limit associated with that. And that's most frequently referred to as a not-to-exceed date on the personnel action. And then, of course, they must retire by the agency-specified date in the VERA offering. So what is VSIP? VSIP is commonly called a buyout, and the payment of a VSIP is the lesser of either $25,000 or the amount of one's severance pay entitlement. So what this means is that an employee who applies for a VSIP may not automatically get the full $25,000. If he or she is fairly new to the government, their severance pay entitlement might not actually reach the $25,000. So let's say their severance pay entitlement equates to $15,000. Then it may be the case that the highest amount of VSIP they can be paid would be $15,000. For people who have been in the workforce for quite some time, most of the time their severance pay calculation exceeds, and probably greatly exceeds, the $25,000, which is why VSIP can be a cost-effective measure for encouraging people to leave the workforce voluntarily during these downsizing situations. VSIP is subject to applicable taxes. It's paid as a lump sum after the employee separates. And it's important for VSIP recipients to know that if they return to the government within 5 years, and that's anywhere in the federal government, not just the agency from which they received the VSIP, then they must repay the entire amount before taxes. And that's an important note, because you will get taxes taken from the actual payout, but if you return to the government, you will be repaying that full amount. And part of the reason for that is because when Congress allowed for VSIP buyouts, the idea was certainly to make it a permanent reduction or exit from the government. VERA and VSIP can be used together or separately. Most commonly, agencies do use them together. And so eligible employees in covered positions, they may qualify for full retirement or optional, as it's referred to, also referred to as regular retirement, and they may do that with the VSIP incentive. Or if they don't meet the full age and service requirements for regular retirement, but they do meet it for early retirement, they may retire under early retirement with a VSIP cash incentive. There is a third category, however, and that is for employees who don't meet regular retirement or the reduced age and service requirements for early retirement, and they opt to just resign. They may be eligible to do that as well and receive the incentive. In terms of what roles OPM plays in approving VERA and VSIP requests, and what role the Office of Management and Budget, OMB, plays. OPM approves VERA-only requests. We have the authority to do that, and we don't consult with the Office of Management and Budget on that. However, requests involving VSIPs do involve a joint OPM and OMB review. So while OPM issues the actual approval, that's only once OMB has concurred with the request. Let's talk for a moment about agency plans and determining what positions should be covered. The important piece that both OPM and OMB look for in the use of VERA VSIP is that agencies are using a targeted approach versus including every position in the organization. Unless there's a total closure situation, we realize that's different and likely you'll have to open up the offer to everybody. The targeted approach means deciding what occupational series, grades, and locations should be covered, how many VSIP slots or allocations the agency can afford to offer, and then also what the cost and savings to be achieved will be. Again, that's going back to doing a cost analysis between what the agency might pay out in severance pay if they involuntarily remove people versus what they would pay under a VSIP, not higher than $25,000 per person, by allowing folks to go out voluntarily. They should also consider caps and limits to avoid an unmanageable number of departures. So agencies have to really decide which positions post-VERA VSIP will be abolished versus restructured. The two fundamental reasons allowed for use of the VERA VSIP are situations involving either abolishment of positions or restructuring of positions once they are vacated by the VSIP recipient. So what do we mean by restructuring? Abolishing is pretty cut and dry. Somebody receives the VSIP payment, they leave the service, and the agency simply abolishes the position and does not fill behind it. But the law also allows for using VERA VSIP in restructuring situations, and this is where agencies have to be careful to make sure they comply with what the intent of that is. So while this list is not all-inclusive, it represents the most frequent range of restructuring that occurs. Very straightforward example is a change in series, grade, or full performance level, the career ladder of the position. Another example would be when OPM and or OMB sees that a geographic relocation outside of the commuting area is involved, such that the incumbent, if he or she declines the relocation, may face separation or be eligible for severance pay. We find that, generally speaking, offering such an employee the voluntary buyout is less expensive and less disruptive for everybody. Another example of restructuring is when the agency or the organization is looking to delayer, reduce supervisory positions, increase span of control. And in those requests, we would be looking for seeing that some of the supervisory positions would be abolished if vacated or restructured to a non-supervisory position. And then finally, if we don't see evidence of some of the common restructuring approaches, we'll look for changes to the skills required. For example, even if the series and grade remain the same, if the restructure of the position involves old versus new skills, then that's an allowable use as well for VERA VSIP. That's referred to as addressing skills imbalances. And by that we mean it's not that the employee, him or herself, has a skills imbalance, but the position, the occupation itself, has changed over the years so that the agency needs to reduce in a line of skills that's not needed any longer in order to be able to recruit for skills that are needed. What VSIP is not intended for. And this is a common question that agencies have. What do I do to not get myself in trouble, so to speak, or to make sure that I'm within the intent of the use of VSIP? An obvious one is to avoid dealing with employee performance deficiencies. So I just mentioned that while the law allows for the use of VERA VSIP to address what we call obsolete skills, these result from fundamental changes to the position versus situations where the skills needed have not changed, but an individual employee is unable to perform the work satisfactorily. Another reason not to offer a VSIP is to be, quote unquote, to be fair and give everyone a chance for the buyout. That is not part of the criteria in either the statute or the regulation. VERA VSIP is not an employee entitlement and should not be used in areas of the organization that are not impacted by the downsizing or the reorganization, and I will explain one exception to that in a moment. VERA VSIP should not be used solely to create promotion opportunities or career ladder advancement. While OPM understands that succession planning is a requirement of agencies, positions for which VSIP is paid should fundamentally change in some way if they are refilled following the VSIP payment. So what you don't want to do is say, oh, I think I'm going to buy out my older workforce so I can make some promotion opportunities for the younger workforce. You've got to be careful there. If that ends up being a result, a residual effect of implementing a VERA VSIP, that's fine, but it can't be the sole purpose of it. You'll be getting into possible age discrimination issues with that. And then on that note, another reason not to use it would be to avoid providing training or retraining for certain categories of employees, for example, retirement eligible employees, who the agency does not want to invest training dollars in. And sometimes, once in a while, we've looked at requests where, the agency feels like they should be focusing their training dollars on the younger workforce. But you've got to be careful to not withhold training opportunities based on this. That could be an ADEA violation. Rarely seen, if ever, but just a reminder that as you use these tools, you want to use them within the intent of the law. And if you have questions about that, of course, consult OPM when you submit your plan. One thing I mentioned before going on to the next slide is that VSIP and VERA can sometimes be used and offered to employees that are not directly impacted by the reduction in force of the reshaping. And this is referred to as offering the VERA VSIP to employees occupying, quote unquote, safe positions. Safe positions, this concept is something we refer to in a couple of our OPM guides. It is not something directly covered in law or regulation, but OPM in certain cases, particularly when an agency is definitely facing a RIF, OPM recognizes the fact that there can be situations where you offer the buyout to an employee occupying a safe position, and that is they're occupying a position not directly targeted for or in danger of RIF, in order to open up a placement opportunity to those folks who might be in that vulnerable position where they will be facing some sort of a RIF action. OPM we explain more of this in another video presentation that we will cover that addresses the agency submission process, the agency application process. And we will go over that in more detail on the actual VSIP VERA application form. So back to just basic eligibility for a VSIP, when an agency has received OPM approval and OMB approval to offer a VSIP, any employee who meets the general eligibility requirements may receive an offer, provided that he or she is serving on an appointment without a time limit, so generally speaking, permanent, not temporary. They've got to be currently employed by the executive branch for a continuous period within the last 3 years. And of course, they have to be in a position, serving in a position covered by the VSIP plan. That is, in the specific geographic area, the organization, the series, and the grades covered in the offering. And finally, they cannot be included in any of the following ineligibility categories listed on the following slide. So there's a number of categories that would disqualify an employee from being eligible for the VSIP. Reemployed annuitants, certain employees who have been approved for disability retirement. Of course, if one has received a notice of involuntary separation for misconduct or poor performance, that would be fairly obvious why we would not be buying you out. If you have previously received any VSIP payment from any federal government agency. And then there's some provisions for situations involving student loan repayment benefits, relocation incentives, recruitment incentives, and retention incentives. So take a look at those in more detail when submitting and offering VERA VSIP. And that information is contained, again, in the Code of Federal Regulations, as well as supplemental OPM guidance. After the VSIP, the rules changed in terms of reporting requirements. It used to be that OPM required quarterly reports that detailed their VERA VSIP usage, but effective January 4th, 2016, that requirement was eliminated. And you can look to that final rule on the Federal Register at the citation provided. Some guides available to you: workforce restructuring and reshaping guidance on the OPM website. If you go to www.opm.gov and you look on the tab that says policy, you'll see workforce restructuring. Within that, there's a VSIP guide, a detailed VSIP guide, a detailed VERA guide. There's an OPM workforce reshaping handbook. There's also workforce planning tools covered on the website under the reshaping piece of that. And then we've provided for you, of course, governing statute and regulation, which you always want to be aware of when you're using these authorities. If you have any questions about the VERA VSIP process, or you're looking to submit a VERA VSIP application, here, provided here is the address of the Deputy Associate Director of Recruitment and Hiring, and then also an email inbox that you can concurrently send the request to. I also mentioned earlier that OPM will be providing a separate video on the application process where we go through the application piece by piece, question by question, and we explain what we're looking for in more detail. That concludes this presentation on workforce reshaping basics and VERA VSIP. We look forward to hearing from you, and we hope that this information has been helpful.